Hello everyone, myself Vaibhav. In today's session of Visual JForex, we will be continuing our work using the indicator Stochastic Relative Strength Index, Stochastic RSI. In short, we will see how we can design and develop the algorithm for profitable trading using this indicator. And this is the third part. And in today's session, the focus is going to be on completing the sell side requirements for the execution of the sell trade. We had finished the conditions which need to be put in place for the execution of the buy trade. Now it's the turn of the sell side of the equation. In the prior sessions, the developments so far include the default instrument subscription, where the instrument of choice is USD JPY. The position amount was defined at 0. Then these three stochastic RSI blocks have been taken with the candle period of 4 hours each. And to look at the price action data, we are also relying on this cluster of 4 candles of 4 hours each, and also the single candle, last candle of 4 hour, and then these two of 10 seconds each. On the lower side, these calculations were carried out where the entry point is being defined with the help of a newly defined variable of 10 pips. We will be deducting or adding the 10 pips to the high or the low for the sell and buy. In case of the buy trade, the requirement was that the buy trade should be executed 10 pips above the lowest price of last 16 hours, and for the sell trade the execution point will need to be 10 pips lower than the highest point of last 16 hours. So that's how this trade system is going to be defined. On the lower side, these if blocks have been used to define the conditions which need to be fulfilled for the trade execution. Now I will give you a brief refresher of the idea behind the algorithm, and it is fairly simple. And we need the stochastic RSI block for the last 4 hourly candle to be below 100. Both the fast percent key as well as fast percent D value should be below 100, and fast percent K should be below fast percent D. That means the underlying momentum is now shifting on the bearish side, and we are seeing some selling pressure on the higher side. And to make sure that the underlying instrument has spent considerable amount of time on the higher side, we are also taking into consideration the stochastic RSI output for the penultimate candle of 4 hours as well as the candle prior to that. So we are relying on the 12 hours of data. We are using two 4 hourly blocks of the stochastic to just to make sure that underlying instrument is showing the stochastic RSI output value at exactly at 100. So we will be relying on that to make sure that underlying instrument is now likely to see some sort of correction, and that's the time we want to initiate the trade. And to also reinforce the setup, we are using the price action data, where the requirement will be that last 4 hourly candle should have closed on the lower side. That means its closing value should have been below its opening value. And as I said, the entry point is going to be 10 pips below the highest of the cluster of four hourly candles. So that effectively means we will be looking at the highest value of last 16 hours, and from that we will be deducting the 10 pips, and whenever we see the price dropping below that, we will be looking to initiate the trade provided all other conditions are in place. So that's how this is going to work. Now let us head back to the Visual JForex board, which has been developed by the Dukascopy Bank SA. We are going to need 10 if blocks. So straight away I will take 10 blocks, and we need to make sure that the conditions which we are defining for execution of the sell trade are symmetric with the buy side of the algorithm. And while defining the buy side, we had needed 10 blocks. So naturally, for the sell side, the number should be equal, and that way these blocks will be followed by open at market trade command, and this I will change to sell. Okay. Now moving on to fast A11 and fast D11. In last 4 hours, there should be some selling pressure building up, and to define that, we have to compare fast K11 with fast D11, and in this case, first input should be less than second input. Fast K11 and fast D11 should also be below 100. First input less than second input. And after that, we will consider the penultimate 4-hourly stochastic RSI output. And in this case, fast K15 would be exactly at 0. Fast D15 should also be at 0. And same thing we will need with the fast K16 and fast D16. Both the cases require first input to be equal to the second input. Okay. And with these conditions defined, all we need is to look at the price action data, and that means get historical candle with the look back period of 1. Its closing value should be less than its opening value. So we need candle 18 candle close to be less than candle 18 candle open. And once these conditions are in place, we can start looking for the order execution point, and that is going to be defined with the help of the price point which I had explained to you, which is going to be 10 pips below the highest value of last 16 hours. First input in this case less than second input. Now moving on to the entry point, we need to compare the candle 20 and candle 21's closing value with the variable which we will need to create afresh, and for that one calculation will need to be carried out, and prior to that we will get this blocks arranged. Now coming back to the calculation, we need a mathematical component, and we need the FHLC is the highest point, candle high, and from FHLC candle high we will deduct the 10 pips which we have defined in this calculation. So it is going to be A1 minus A2, and the result of the calculation will be sell entries. Okay, now coming to the defining of the entry point for the execution of the sell trade, we are going to need to take this output SE, and whenever price starts to drop below the SE, we will look to execute the trade, and for that, to define this condition, we need to compare candle 20 and candle 21's closing prices. Candle 20 has the look back period of 1, so its close needs to be below the SE, whereas candle 21 has the look back period of 2, so it should have closed higher. first input greater than second input, and here first input less than second input. After these conditions, we can join the trade command block. First input less than second input. We also have to define the input parameters for the trade command block, and all these input values will be similar to what we had done for the buy side. The only difference is going to be the order command. This is going to be sell, whereas it was buy. Default instrument will remain USD JPY. Trade amount I will change to 0.1 million. The page will be changed to 2 pips. And coming to the stop loss and take profit combination, to make sure that the risk reward ratio is going to be 1:2, I am taking the combination of 15 pips and 30 pips. Stop loss is 15 pips and take profit is going to be 30 pips. So you can compare. We have identical parameters, input values for the sell side, and the whole construct is fairly symmetrical. We have used same number of if blocks. The only thing is that the buy side and sell side can be considered mirror images of each other. The conditions get inverted. So with this, the algorithm is complete. I hope you have been able to understand the logic and the execution part of this algorithm, and hopefully you will be able to reconstruct it on your own using the Visual JForex board. And as and when you complete this, you should also run it on the historical data to see whether it is profitable or not, and that will give you the idea of the underlying algorithms logical soundness, and whether it can bring in profit in the market environment. Thank you all for joining in. Don't forget to subscribe to the Dukascopy webinar channel. See you next time. Till then, goodbye.